Alright folks, good morning. We're going to do another exercise here. The assumption is we're going to go lower on the day. And I'll show you where I think it's going to go ultimately. But right now, we're going to trade short against these equal highs. Okay, so we're going to go short. Again, this is a drill. Okay, we are short. We put our stop loss. $20 pips above our entry. I'm going to drop out to a 15-minute time frame. You can see we're working off of this consolidation. We had one hit to it here. Second one. A fair value gap in here. This is where I'm going to look to see if I can take something off in here. Right there. And we zoom out a little bit more. On an hourly basis, we have a liquidity pool resting below here. So I want 13 big figure might be where it ultimately reaches for. We're just going to keep this as is. Drop back into a 5-minute chart. Now, this exercise is, again, to build tolerance. It's not about getting in at the ideal entry point. It's to teach you patience, sticking with an idea, and allowing price to do its typical behavior. Now we have equal highs in here. What is permissible? Well, we're going to look at it this way. We have an order block in here. And we have an inefficiency. Sell side imbalance, buy side inefficiency. So we could see price run up into this, bump a shallow run on those stops, and then resume lower. It doesn't have to do it, but that's what we're allowing for. Our stop is above the bearish order block. If it goes to this price level here, you want to be out. Why? Because we have a liquidity pool resting here, and then we have equal highs here. So if it goes above this order block this much, it's essentially part of this range. You can see I have not set up. You can see I haven't set up my fib yet. I'll just keep it as it is here. Get rid of all this extra stuff. Get rid of all this extra stuff here. Trim the fat, if you will. So we have 50% here. So we would be above equilibrium. So we would be in premium. And we would most likely probably seek a higher premium, which would be right in here. If you use the total range from yesterday, it still fits the same criteria. Okay, there's 50 pips. Okay, and then we're just gonna let this thing do its business. All right, so at 7:40, we know there's a likelihood of over the next hour, or a little less than an hour, we could see a little bit of a retracement. Again, we're watching to see how much of a move above these equal highs. Now notice that these equal highs are inside of a extension lower, so the market's entered a measure of protraction on the downside. Price dropped down below these equal lows we had highlighted yesterday, right in here. So we only had a shallow little bump here, so you left those equal lows intact. Price stabbed through it here, ran them, came all the way back up, took the stops here, closed in this sell side imbalance, buy side inefficiency, filled it perfectly, then rejected, and then made its reasonable run of 30 pips below the equal lows. Still have time of day, still have plenty of time in the daily range. Even though we had a retracement back up to this level in here, it would be reasonable to anticipate a bump in here. Think of it kind of like we did here. We had this low, went shallow just below it here. I'm expecting that same phenomenon in here, but just right to this area. That's what I'm allowing for. If it trades through that, I don't want to see my stop taken. This is just a catastrophic stop. It's a safety net. It's not a full stop. Now, the reason why I'm doing that is because the context is we should see it continuously roll over trading into Friday. If we see a more pronounced move above these equal highs, then it's probably going to be a run to take out this liquidity. And I may be wrong about my expectations about the dollar. Speaking of which, the dollar, we had a nice little run up. If we go into a 15-minute time frame, drop back out, everything that we talked about yesterday with our fair value gaps and the liquidity resting in here, coupled with the ADR traded to here and rallied through. So we had an ADR yesterday that was below. It never traded to it, but we did see it trade to today's ADR. Hit it, went higher, cleared the original highs up here. Nice area of liquidity, was attacked. This to me, like I said, I didn't see this yesterday as a reversal. All we were doing was we were going to be seeking sell side liquidity, and that's all the dollar index did. We traded down to it and then rallied higher. Take a close look at what you see here. This order block is candle body is exactly within this fair value gap. That's not random. The down close candle here becomes, well, the series of down close candles here is still the order block from if you had a 45-minute chart, because it's 15-minute candles, 3 of them is 45 minutes. The last down close candle is what our focus is in the proper context, not just every down close candle is a bullish order block, but it occurs within our fair value gap that we have outlined earlier yesterday. This down close candle is a propulsion candle. Why is it a propulsion candle? Because it trades into a lower down close candle prior to an up move. Propulsion candles cannot see a move or a retracement beyond 50% of its range. Midpoint of that is right here. We don't get it. We get into the order block here, but it never goes down to the 50% level of that. That's a propulsion candle. That's a very energetic bullish order block, and you can see the effects of it. True to form and definition runs to the buy side liquidity resting above here. Okay, so we're seeing a little bit of a retracement. We have an inefficiency right in here. Not a lot in there, but it certainly got my eye. So we'll see if there's any sensitivity on this level. Volatility looks like it wants to pick up a little bit. Okay, so we can see it trade down into that and then resume higher. There's that spike we were looking for. I wish I would have had it on the euro dollar at the time. But we spiked through. Okay, it's a little bit more than I wanted to see, but nonetheless, that was the move we were looking for. And now we should start to see it erode. Come in here, fill in this area here, then attack this low. Note the lack of continuation, even though it had a little tiny little micro burst of energy to run those equal highs right in here. We're in ahead of the move. We're not trading in here. Okay, so what this is teaching is you don't have to have the best entry point. You don't have to have the highest high in a short position, but you do have to measure the underlying context. So while these equal highs were in place, we know that there could be reasonable expectation to see it run through. Running through that, how much of an impact will that have on the short? Well, that's what I defined with the stop above the bearish order block here. And we want to see it spike through that and then roll through. Entering down here and not up here because you could not get a fill. I mean, you could have a limit order up here. I've had many instances where I've had limit orders never get filled, but yet the chart certainly reflects that it should have. If you're doing a demo, many times the demo will absolutely fill you, but try doing it with a live account. Sometimes they won't trigger, and it's just one of those unfortunate things. So the way you combat that is you use what we're showing you here. They may make one more pass in here to get people excited and then send it aggressively lower. But we don't need the highest level of precision or accuracy for our fills. It's not necessary. So what I've defined here is the bearish tone in the marketplace. Euro is holding a weak price structure. Even though we do have all this liquidity here, I don't think that it's noteworthy at the moment. If we obviously run to the stop, because it could do that, and that's what its job is, to protect unnecessary price movement against or opposing price action to the trade. So we have a nice little spike in here. They ran the stops on these equal highs. A little early for my tastes. I would have liked to seen it do it at like 8 o'clock, maybe 8:10. But that's it. So we're going to let this thing pan out and see what we get from it. One of the things that you may not have noticed, let me take this level off and this level off and this. We don't need it. It's probably distracting. It's very distracting to me. If we look at this consolidation in here, right in here, and we draw it down to a 1 minute, you can see consolidation, left the consolidation, came back into it, distribution, redistribution, smart money reversal, low risk buy in the order block, rally, reaccumulation, reaccumulation, and then rally through, clearing up the original consolidation. So we have a market maker buy model. Now we are in a market maker sell model. So we have our consolidation down here. Reaccumulation, reaccumulation, smart money reversal, low risk sell inside our area we were looking for. And then we've seen price run. Now look where we're at. This is that 15-minute time frame. The fair value gap. We're about to close that in. And what I want to see is I want to see an energetic run through that, not just a closing and then pausing or hanging around. I want to see it cut through that rather aggressively with a great deal of magnitude and speed. That would indicate that we didn't just come back down here for fair value. We're going to be seeking a lower level pool of liquidity. Okay, there's our fair value gap filled in. Right in here, beautifully. But again, we don't want it to stop there. We want to see it go through that. If it trades through that, that's how you know it's going to be the run on the stops below that low. And that could be an area where we can take our first profit. My concern is not up here about getting stopped out. I'm not worried about that. This order is there to do its job, to protect me from that should it occur. We had our run on liquidity like we were expecting. We shorted ahead of it, not fearful that it's going to keep on screaming higher. This assures us a fill and low leverage. There's only 2 contracts or lots. You can hear the commodity trader in me still. The 2 standard lots is very, 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 very low leverage for this trade idea. So even if it were to stop out, a full catastrophic stop out at 20 pips is only $400. So $400 from a $100,000 account is insignificant. And you probably don't like the feeling of losing $400, but if you are completely debilitated because of that, trading is not for you. You're going to have to get used to that because you're going to have losses that are going to be larger than that. Just want to have my orders I'm going to want to take one of them off should we get this run. Again, we don't want to see this. It's not what we want to see. We want to see price stay moving lower. Now, how far can it move against us and be a tolerable event? This low, it can come back up to that, close in all this sell side imbalance, buy side inefficiency. So there hasn't been a whole lot of buying in here, but there's a small little window right in here. So I'm just going to add that. And this is what you do as you watch your charts or you study in hindsight. You want to see how it does these very things. Right now, the range is the wick high of this candle here to that low. So there's an inefficiency of buy side liquidity offered in here. So it could spike up to that. I don't want to see it go any more than that. So we'll keep that in here. It's better if it doesn't fill that in because that means it would be a breakaway gap. Now, I don't usually have these rectangles on the chart when I'm watching price action. I just instinctively know what I'm looking for. They're just helping me illustrate the very points of price action that I'm using to weigh institutional order flow. So in other words, I know that IPSA can go up there and close that little gap that we highlighted in here. It can fill that and it'd still be okay. Now, it could still spike up and hit the bottom of this up close candle. That's still permissible, but I don't want to see that technically. I don't want to see it at all. I want to see price really be kept lower than this gap. Maybe find resistance at it and then go lower. But we certainly can do a refilling of this and rebalance and then continue lower. That's certainly within the realm of reasonable. Knowing this skill set and understanding what price is allowed to do within the context of a theme. In other words, we're looking for a sell-off in the euro-dollar to continue going into the New York afternoon. It removes a lot of the uncertainty, which is the core of anxiety. Okay, so we've filled in that gap now. right in here. So we'll see what we get as a response, if at all. Now, another way you could use this current price action is you could use this as an entry right now, because we would be selling at the closure of a sell side imbalance, buy side inefficiency. So price is rebalancing when it comes back up to this level in here. And the context is we should have this high intact. In other words, it shouldn't run that. If it does, then we're probably going to go higher, and we will want to be stopped out on any short position. Thus far, the low is 13,442, and the high 13,442. You can't get any better than that. So you could be a seller right now. And again, you could use that same stop above the lower level order block that we had on a 5-minute chart. Now, we did go outside of the range a little bit. Again, we mentioned that we could go to the bottom of this last up close candle. It's better if it hadn't done it, but that's what we're looking for as a threshold not to be breached. This is where you desensitize yourself. You don't worry about the outcome. You're engaging, studying what price is doing, measuring its willingness to stay within a predetermined range, the range being this spike that we are expecting. This is what we're basically, well, this is what I'm framing out in my mind. This is the range that's in play right now. This is the dealing range we're at. If I can get, there we go. So between this low and this high, this is where price is dealing. The liquidity that rests above this high is problematic for our short, because there's nothing over here to rebalance to until you get back above this high here, and then you have these equal highs. So that's why our stop is above this range, but not so much higher than the high. When we use the 5 minute, let's go back to the 5 minute just to show you. We have this bearish order block right in here. So our stop is above that. So we don't want to see a run above this high with any more significance than this. We want to be out of the trade, because it's going to suggest to us that this area of liquidity is going to be attacked, because there's really nothing over here that they would need to go up there and hit, unless it's just some crazy injection of volatility that would be a random distribution of losses that's going to come that you have to prepare for. But if we go out to a 15-minute time frame again, got real close to that candle's low. The low is 1346.5, and the high thus far is 1345.8. Okay, so we've closed in this so that we can remove that now. But you want to take a screenshot of this. If you're doing it live, you want to get a screenshot of it and then come back and update your screen capturing throughout the day. This is still intact here. All right, so we hit the order block now. Now we have to really start paying attention. Does it want to get back above this high? Because if it does, chances are we may have the opportunity to save the stop. That means kill the trade before it hits a full stop. The stop is not always meant to be take my stop. I want you to take me completely out of the marketplace at that price point. If there's an opportunity for you to save the full stop, you should, but don't feel the impulse to get in there and try to get shaken out of the trade, because that's not what we're describing here. I'm not giving you a formula on how to be shaken out of trades. I'm showing you how to stay with a trade, even enter before the actual ideal entry point, but still maintain composure. And that's really what we're trying to cultivate with these exercises with you. So all this sell side imbalance has been rebalanced. And we want to see if the market has the ability to want to come back down and then seek a lower level liquidity resting below here. And one of the things I want you to remember is don't get hung up on the fact that we're only talking about an entry at 113.46 and it's only trading down essentially, like almost 5 pips or so. Big deal. It's not a lot of pips, right? But the same thing I'm doing here with this 15-minute time frame is what you do with a daily chart. Everything that's being explained here, if you apply that to a daily, it gives you a lot more pips. It gives you a lot more range to work within. Your structures are larger, so the opportunities are going to present larger potential yields. In other words, your returns can be much more pronounced. So again, try not to count the money. It's not about the money. It's not about the only reason why I did 2 standard lots is because that way I can do multiple exits. It gives me enough framework to work within where I can scale out multiple positions. I want to try to do 10 pips below that low here and then do 20 and then try to leave a piece on for that 50 pips. We're watching price bang around inside this range in here. Reasonable return back to the bearish order block in here. I gave you context. I told you what I would expect to see happen in price. I gave you trading thresholds. What is permissible while opening and managing the position? What are you as a trader, or in this case, me as the trader, what is it in price action that I will allow to occur in price action before I would hopefully not get stopped out, or if I had the opportunity to, I can nix the trade, kill it, and not take a full stop. But importantly, the takeaway is what you're seeing is the framework, if you will, of how you engage price and you desensitize yourself. I'm not trying to show you the best entry point. I'm not trying to show you the best precision element, because right now this is a really murky price action. All this in here, this is really, really hard to trade inside of, outside of the equal highs. So that's what we're framing it on. But using the tools, this is what we're working with. And I'm giving you all of the internal dialogue that I would have watching the price action and what thresholds, in other words, what that means when I say the trade thresholds are, what are the boundaries that the trade could trade within and not go beyond, where it makes the trade less likely to pan out in my favor. That's what I mean by that. So when I give you all these inside track details, if you will, that's the missing link that's not in the free tutorials. And you don't need to see, like I said, I don't want you to be conditioned to expect these things, dozens of them a month. You don't need that. I'm illustrating what you are to do. You are supposed to be doing these things, not me showing you every single time I want to sit down in front of a chart. When you're taught how to ride a bicycle, the person that watches you ride the bike and fall off, many times they get on the bike and they show you. This is what you do. You get on there and you pedal and you balance. You keep adjusting your weight to the left and the right to keep your balance, and you keep pedaling. Look up, don't look at your feet. And then you are to get on the bike and you're supposed to pedal. And you're supposed to respect the fact that you can fall and hurt yourself. That's the incentive of not falling. Okay? So I only have to do this a few times. And then you need to practice with what the content shows you. Okay, so now we're outside that fair value gap. I want to see it speed up in here and reach below this low. Notice the time of the day. We are at almost 8:30, so it's about right on time. So now at this point, I'm not thinking it's going to go higher. I'm thinking it's going to attack this liquidity down here. So I'm comfortable. I'm not concerned about getting stopped out. And now I can adjust stop and lower it and lower my risk. So now I can put it just above these equal highs now. My risk has now been trimmed to less than 9 pips, less than 8.5 pips. And at this point, I do not worry about moving it. I'm monitoring the price action down here, and I'm measuring and weighing the likelihood of it to want to seek lower liquidity. The first sweep grade is 10 pips here, and then 20 pips will be referred to if we can at least post 10 pips. But we're looking for a run on that liquidity right below here. That voodoo that we do. It's boring, isn't it? It's the same old stuff all the time. But somehow you're going to find it hard to sleep this weekend. All right, so there's sell orders. All of the sell side liquidity right now, all those orders are hot. That means they're just pinging right now, and they're going to be basically wanting to skip down. And we'll see in an ideal situation, we want to see a rush to get down below there and then expand lower, and that will cause trader remorse. Anyone that went long that has an absence of a stop in place protecting any long positions, they're going to be into the hope and pray model, and hopefully we'll see this thing tear off into a much broader decline. Now, looking back at current price action right now, there's no gap. All of this has been filled in. We've traded back to the bearish order block. There's no reason to worry about going back up here. There's no reason to concern about it. Nothing. If it were to trade up there, that means we're probably wrong on the trade idea, and then the stop we'll just let the stop do its job at this point because it's very, very low risk. But nothing in here needs to be traded back to, so it gives you a peace of mind factor that is lacking in retail, because you really don't know what the hell you're doing with retail. You know, what animal pattern is going to support your trade idea? You know, what support and resistance level is going to support your trade idea? What diagonal trend line is going to support your trade idea? None of that stuff is a concern for us. All we're doing is focusing on the liquidity, time and price, and IPTA's algorithmic return back to fair value, and then seeking liquidity outside of the range. Really, really is liberating knowing what you're doing and what's going to happen. It's literally like knowing tomorrow's lottery numbers. All you need to do is work to get the money to pay for the ticket. And that comes by what we're doing here. Practicing, practicing, practicing. Believe me, you do this a few times, a couple months, you will be thoroughly convinced that if you are if you're unwilling to work a second job to build up a nest egg to trade with, because you may not have a whole lot of money. Most of you in here are just scraping just to pay for the mentorship, and I get that. I understand. I was there too. But once you learn this skill set, you have the ability to multiply money. You have a skill set that isn't taught in school. So your confidence level should be increased to the degree that an extra measure of effort right now that you don't feel is feasible, or I don't have the time or the energy for it, believe me, you will find all the time and the energy to get an extra job, to get money, to build up a nest egg, a couple $1,000, whatever it is that you feel comfortable doing. When you make that decision to go to live funds on your own, not because I said so, you will know that what you're doing is the best thing you can be doing for yourself and your future, because you don't want to be submitting to someone else's time for money, because jobs don't make you wealthy.
Now, if we do go higher, it should be capped by this low end of the fair value gap or the midpoint of it. Okay, so that's the permissible threshold of the trade. So we don't want to see it go past the midpoint of this fair value gap now. Everything is lower or consolidate a little bit more, but I'd rather see it just make a drive lower. Okay, it's 8:30 in the morning. We should see that volatility injection now. IPTA will look to seek nearby liquidity. There we are, 8:31. So time and price theory suggests that we should seek the path of least resistance, rather. A little bit of a tongue twister for me. This is the easiest path to get to versus coming all the way back up here to get this. Here we are. Okay, so I've taken one off. Now that I've taken first profit, I want to reduce the risk. Here. So now I don't want to suffer any kind of retracement. If it comes back out, knocks me out, I don't care. We've done our job. We've mapped out the framework. We did our exercise. Regardless if it stops us out, that's not the outcome. We're not fearful of it. We're not worried about it. We don't, sulk about it. Oh, I should have took off both of the standard lots if it runs back and hits your stop. Those things are not in your mind. You're not concerned about that. This exercise is exactly what you want to be doing every single time you sit down. You want to map out what the likelihood is. You want to see what the context of the marketplace is offering you. You're going to look for liquidity, the open float. Where's the stops? Where's the buy stops above current market action? Where's the stops below current market action? What traders would be hurt the most given the current condition or market structure? And all of that helps frame and all the things you'll learn in the mentorship, obviously. But doing these things, it can't be replaced with a book or a video series by me even, or a mentor sitting down with you telling you something. You have to do the exercises yourself. Because if you weren't here watching me do this live, and I showed you after the fact, it would just look like, okay, well, he got lucky here, and look how much it moved against him, which is minor in terms of pips. And then getting out down here, oh, it was just blind luck. But they weren't here live like you were, where I was explaining everything, what should happen before it happens. And to script, here we have it again. So even in murky price action like this, where there's really hardly anything to work within, I present and provide you tools to engage price. I already know what IPTA is going to do. And it sounds like a broken record, but I'm telling you, you are in the right place. You may not feel like you're learning as fast as you think you should. You may think you should have more understanding than you do right now. That's not an objective way of looking at it. You're rushing. You're panicking because you feel like you're spending a lot of money to learn this, so therefore you should know everything the first or second or third or fifth or halfway through. Even the mentorship charter members. Watch what happens here. Right back to that fair value gap. Right in here. Would have liked to seen it stay within that, because that would have been a real good example of how it offers real support and resistance. But if it gives up the ghost in here, then it's obviously making a tear into this high. And that's the reason why I want to knock in that stop a little bit more. And I don't care. I don't care about being stopped out at this point because I did what I was supposed to do. The analyst, if you will, told me this is what you should expect to see. The trader in me said, okay, well, I'm going to engage with these tools and these ideas. And then I had to kick the gambler off the stool and tell him to sit down and shut up and just let it pan out. So there's three people inside you all the time. The analyst, he's in the driver's seat. The trader, he wants to do something. And the gambler just wants to wreck everything all up. He's the action hound, or she's the action hound in deference to the woman. So you have to balance all of that. Every one of us have it. One of the three is going to be your strong point. There we are. Look at that. I'm talking here and I don't have my orders ready. Market execution. 0.5. Okay. So now we take another piece off. Notice how the fair value gap acted as real support and resistance. So now I want to lock in a little bit more of that profit. We'll go right to this price point right here because that's the last known rebalancing point. And that's all the detail I'm going to give you for now. And we'll just watch and see what this does. Much more definition than a free tutorial, isn't it? It's like magic. All right, so we have price moving. There's 20 pips right there. So we've done a 20 pip grade stop sweep. And then we have 30 would be here, and we have a best case scenario if it spikes down to give us 50 pips on the week. And that would be right. Good grief. There we are. That would be 30 pips. Now again, I know you're probably thinking, man, I wish this was happening every day. I'll sit down and explain this with you live. You do not need me to do this with you live. Because if I do that, the only thing I'm going to do is teach you to be dependent on me. Use these examples to frame out how you engage. It's a practice session. Notice what it says up here? Demo. Okay? There's nothing to fear. There's no reason for you to be apprehensive or concern yourself with, what if I'm wrong? That's where you're going to learn. When you get it wrong, there's opportunities for you to learn. But you're not going to learn just by watching my videos. You're not going to do it. You're not going to learn outside of what you just watched here. You're not going to have any more deposit of experience than just that. This was my experience. I experienced this move. Maybe some of you, I don't know if I'm not watching Twitter at the moment. Maybe some of you are participating in this. And maybe you did find a setup like this. And that's great. But if you didn't and you missed it, at least you have it in recording and you can watch it over and over and over again. The internal dialogue, all the things that go along with it, everything that you do is in the mentorship. All I'm doing is taking that insight and providing it with a real example over live charts. So inside of 1 hour, because now it's 8:40, remember we looked at the clock at the beginning, 7:40 we started, and I said within about an hour or so we would see the move. Well, there's your move. You don't find this stuff in books. Other educators do not teach it like this. There's nothing like this anywhere else outside of me. Now that may sound arrogant for some of the new folks here, but trust me, I know, okay? I know what you want to know. I know how to teach it to you, but you have to submit to the time. That part is your responsibility, and you have to practice. Because if you practice, I promise you, and I absolutely damn guarantee you, you will get this. And once you get it, no one can take it from you. And it's a life skill that you can pass on to your family members. There's nothing better than this. There really is nothing better than this. To me, this is the closest thing to fortune telling without being witchcraft than anything else. Like, I literally have the ability to teach you to time travel. We know the future. It's as simple as that. And it repeats over and over and over and over again. Baby Pips days, when you guys were watching me, if you knew me back then, I was wrestling inside with whether or not I wanted to give this level of insight out. And sometimes, if I was being honest with you, the greed in me, because I have that, everyone has it, I didn't want to give it to the world. I didn't want to, even though I made a promise originally and said if God would allow me to learn this, I would teach it to other people. And I started to wrestle with that. And looking back now, obviously it's the enemy trying to keep me to be selfish. But there are so many things that if you think this is interesting and powerful, this is nothing. This is absolutely nothing compared to what you learn. But you have to be here. You have to be here. You got to be a part of the group. And you got to spend time with us and go through the mechanics and procedures that lead to this understanding. It's not going to happen right away. Surgeons don't go out of school with their degree and start cutting on people. That's not how it works either. They got to sit around and watch other people do it and explain it in detail. And when they encounter problems, they explain what they do to mitigate those situations. Well, that's what I just did here. Everything I'm teaching you is exactly what I do every single day. I use the concepts that I teach you. There's nothing hidden. There's content that you haven't gotten to, obviously, and even charter members. They don't have nothing yet compared to what they're getting. So you have to be here for a while. There's so much more that I have to teach you. Well, I really don't have to teach you, but I want to teach you that will bring a great deal of clarity and understanding about what may happen in price. And then you'll be able to pick and choose those little sweet spots where you want to engage price. You'll know right away, oh, this is framing a setup that I can get 20, 30, 50 pips out of. And if it does and you engage properly, there's no better feeling than that. Like this consistency is what you are going to fall in love with. Whereas right now you go to your job every single day. It's monotonous. It's consistent. It's the same thing every day. But you don't like that. But this consistency, working to do the same thing over and over again, you'll love it. It becomes boring after a while, years of it. And it won't be boring, for the first couple of years. But after a while, you'll get bored with it too. Doesn't mean that you fall out of love with it, obviously, because it's fun. Like, if you don't find this fun and fascinating, trading's not for you because you're worried about money. You're just the same as the person going in there spending half their paycheck on scratch-offs trying to get $20. They'll spend $300 to make 20, maybe. I'm not trying to cultivate that. I want you to be passionate about your work ethic and your study and the direction you're going. I'm convinced that you are the best place you would ever want to be to learn how to speculate. I'm biased, obviously, because I think I'm the best in the world, and that is arrogance coming out. But judge me by my fruits. That's all I'm saying. What I say and how I deliver it isn't not as important as what I'm teaching you. And you'll see what you feel 5 years from now. Because believe me, it's not my intentions to create arrogant, SOBs. But when you see other people on the internet pretending to know something they clearly don't know, it's hard to keep it inside. So we're going to let this thing pan out. I'm going to stop jabbering on, and either we're going to stop out or we're going to see the limit get tagged. It may go a little bit more than my limit if it wants to tear off and go much lower. I don't care. My objective is I want to show 50 pips and be done for the week. Okay, so there's our stop out. So this exercise is done. So I'm going to create a naked chart here just for the purposes of showing you what we did, or what I did rather. Go to account history. And again, this is something that I wish all these pseudo educators would do. One account, keep the account number up here, work with one account, show over and over and over again executions from that one singular account. If everyone on Twitter would hold educators accountable to this degree, they would disappear, because they wouldn't have the clout to fleece people for money when they had no business teaching nonsense anyway. So you have to have the ability to do something before you can expect someone to pay you for your services. All right, so we have today's price action. I'm going to take these, drop them up on the chart, and you'll see everything. So now we have equal highs. The entries here are ahead of it with the expectation, and we heard in my dialogue my expectation we were going to run through that, have a shallow little run above these equal highs. That is in fact what we saw. All right, so we have the equal highs in here, the run up into it, shallow, order block, sell off. Very, very modest drawdown. So the high was 58.4. The entry was 46 even. So 12 pips, less than 12.5 pips of drawdown, using a sloppy, by all standards, looking at it outwardly, not having the context presented to you like you had. Early entry, 12.5 pips of drawdown. Again, that is modest. Look at what retail trading ideas would give you. This is the sloppy early entry, but knowing what the market may do with the proper context, institutional order flow, all the tools, runs on liquidity, and then executing, and then the stop out. So now this exercise is done, completely and utterly done. So in I guess it would be what, two trading days, 1% return. Today was one more example of the level of understanding you're gaining by being part of this group. So again, I do not want you to feel that you have to be spoon-fed this multiple times every week, not even once a week. I don't need to do these types of things, not because I'm above it, okay, or that you're not deserving of it. It's a matter of preserving the level of commitment that you had to have getting here and starting, and you will have to put the work in yourself. You're not going to get this. You will not get this without you practicing. Doing it wrong, okay? You're going to learn from doing it wrong. That's the point of having a study journal. All of the elements that I gave you today, you want to go through and watch the video again and screen capture it. When you hear me say certain things, take a screen capture of that and then add additional notes in your own words, what that means to you, what questions that you have that may arrive by looking at what I've done today. Because I'm certain there's going to be some of you going to be saying, well, why didn't he do this or why didn't he do that? They will create excellent learning opportunities for you. And that's where you take that question and you put it in your study journal. And then when you get the answer, because it's important to you, when it happens, it'll be an aha moment. In a future content lesson, or maybe another session like this, I'll say something or show something, and it'll fill in that gap in your understanding. And because it's important to you, it may not be necessarily important to other people in the mentorship, but it's important to you and your understanding about what you're learning here, you'll have that epiphany. It'll happen. You'll have, I got it. Now I know what he meant by that. And then you'll go back to your study journal, and you'll fill in the answer in your own words. And then it will be anchored mentally. You'll never forget that. And it'll be a special moment in your development where you'll look back and say, that was a milestone for me. I understood why he expected the fair value gap to act as a support and resistance idea. I understand now what the draw on liquidity was and why he was so confident about not worrying about it going up and hitting a stop, because there was no more inefficiencies to the left and everything was pointing to the stop run below the market price. All those things, okay, are experiences, and you're accumulating them. But the majority of the accumulation of your exercise experiences are going to be done without me doing it with you. And what I mean by that is the moments that you're spending in the charts alone, practicing and engaging, don't worry about your demo account balance. Don't worry about drawdown. That's not important. The demo is there to do its job, to keep you from taking a financial loss while you're learning a skill set. Treat it like it's meant to be treated. We're not in here over leveraging to try to show Instagram ridiculous results, with many times those positions they aren't held with stop losses. They're held for many days anyway. It's nonsense. You want to have a sober approach to doing what you're doing here, practicing, developing your skills, and doing it with independent study, because you are not going to get this just by watching videos. Binge watching ICT does not equate to experience. It just means that you're familiar with it. You've seen that before, but can you do it? I've watched gymnasts do amazing tumbling routines. I can't get out there and do that stuff. I get that, break my neck. But I love sitting and watching it, but I don't aspire to be a gymnast. You paid to be here, so you're aspiring to learn how to trade. So the skill set before learning how to trade is price action. You have to understand that. And that's what I guaranteed. You will learn price action. It's unrivaled anywhere else. Nowhere else will you see what you're learning here. And you don't get people explaining it over the shoulder like this anywhere. Believe me, I've paid to be in other people's things. They don't do this. And they aren't as accurate, and they're not as precise and forthcoming with the experience. They'll show indicators, they'll point to certain things, and they'll talk about things that don't even pan out. But they like to talk. They want to sound wordy. But everything they're saying is nonsense. Again, judge the mentorship by its fruit. If it's not showing you the level of what I said it was going to do, don't stay. Don't waste your time. Don't waste your money. But if you are seeing what you hoped to see, and I'm getting a lot of emails from new members that are saying that this is way beyond what I thought it was going to be. And that's exactly the result that I'm going for, because I could be on the social medias and doing all kinds of advertisements and talking about how good it is and showing this and showing that to entice people to get in here. No, you've been shown what I can do with this information. If that isn't interesting enough, then don't come in. And a lot of people aren't coming in because they doubt and they assume they understand everything because of the free tutorials. Those free tutorials, they're just a good helping hand, but they're not going to get you to where your mentorship is going to take you. So I just want to remind everyone, don't build the assumption that you need me to do this for you. You don't. You've seen several examples of me doing this in other mentorship videos. I'm just doing it now to show you, even in sloppy market conditions, and that's what this is. This is very, very sloppy. And I gave you reasons to get in the trade before the best case scenario. I could have did a limit order, or I could have waited for the spike to get up there and hit it and then do a market order. I could have got in higher than I did. I'm showing you that you do not need that. Students are coming in here expecting at month 9 to be able to go in and day trade and scalp and get the highs and the lows and all that and do it every single day. That's unrealistic. It took me years to get to the level of proficiency that you're seeing. It's not going to be any different for you. Trust me, even with me helping you, it's still going to take some time. And that time is going to be largely unique to every one of you. And you can't force it and you can't rush it. So just relax, Let the process take its course. Don't worry about it.